Good morning, it's 9:49 a.m. Eastern Time, Thursday, January 9th. This is the Stock Index Portion Report, and this is Richard Pawson. Okay, we're looking at a daily candlestick chart of the Dow Jones Industrial Cash Index. I want to point out some things here on the short term first, and then we'll get going on the larger intermediate trends. I realize most of you are not short-term traders. Okay, at any rate, L3 short-term cycle bottom. It's how we do business for a month, and right there's the cycle. Bottom to bottom with a right-hand translation, meaning it spent most of the time going up, little time going down. In fact, price came down very little. We believe it has bottomed. We believe it bottomed a little bit beyond our best guess time zone for a cycle bottom. Doesn't bother us. It kind of looks like a double bottom here. Let me double check that just to see. 416.49. Yeah. Okay, so the bottom was January 6th. We were a little off the mark. Okay, there's our window of reversals where we try to be more precise in timing, and you can see we might have been off a day off the timing, but we actually caught the price level correct. 5 days stochastic come down, just started to touch oversold and rolled up here for a buy signal, and then it's floundering a little bit, and that's due to the floundering action of the last 2 days here. At any rate, we think the forecast is up. In fact, this chart is not updated yet, but the market is open, and the market is up at least a little bit, and we had a lower jobless claims report. So on one hand, that should be bullish. The ECB did not left rates unchanged, but also offered some triggers to cut back on their kind of QE or stimulus kind of programs. So the euro's down, dollar's up. I don't know how much that'll affect the U.S. market. To me, that just says status quo. We're in a bull market. And then the U.K. also left their rates unchanged and pretty much setting with their QE programs. So status quo, still in a bull market. Even if they had cut back, that's still bull market in my opinion. Okay. So what we've done is drawn a time zone here for the next L3 top, and we think it can do something like this, where the Dow only rallies a little bit back to the old high, a little bit above it, flounders around, and comes down. At the same time, the time zone allows all the way up to, actually we want to move that up to, about 16,900. I think that's good enough for now. We may want to revise that higher. Now, so the earliest for a top is January 13th to January 21st. We think it's probably going to top an early side. Now I'm showing my critical point method here, which if you can't read these retracements and know how to make it, you can contact me, I'll tell you. I think it works pretty good, at least on the shorter term end. At any rate, it's saying if it can make a new record high for the Dow, we ought to consider 16,715 to 16,791. The S&P 500 consider 1867 to 1877, and that's interesting because our long-term stair-stepping objectives have been 1800, 1840. They work very nicely, and the next one's 1870, and the next one's 1910. At any rate, although this is floundering right at the moment, I think the trend is up. Expect higher stock market into next week, probably a top next week and a pullback maybe to a bottom the following week. Okay, we'll update as we go along. So it looks like the larger trends probably should still be up, and probably new record highs are coming. So this is the weekly chart where we compress those L3 cycles. They look like pops and drops every few weeks, some working better than others. Okay, and they build into larger L2 cycles. The L3 cycle is how we do business during the month. The most important uptrend, downtrend, most important supply, demand, price fluctuation. Then we tend to do business on a quarterly and semi-annual basis. That's kind of a simplification of how to explain the L2, L1 trend. So here's an L2 cycle, another L2 cycle that was cut short, an anomaly due to all the government complications and problems. We correctly forecast that and called that bottom, by the way. And we have a video on YouTube to prove it. Now, nice bull market up into an L2 top, another pullback for an L2. So here's an L2 cycle, okay? So it should rally up in an L2 cycle, and eventually by February, probably pull back into an L1 cycle bottom, okay? Now, this means it's probably rallying into an L1 cycle top. What are the L1s? Well, that's a combination, 2 or 3, most of the time 2, of cycles. And it's how we do business on a semi-annual basis, the more important moves of the year. This was broken up into 2 beautiful cyclical L2 cycles. Okay, but this is the more extreme bullish L1 cycle. That's what you get. Right-hand translation, just push it, push it, push it. Okay, so we're anticipating a top starting week of January 20th to as late as February 24th. Way too late. I say it tops towards the end of January to maybe the first week of February. and we've already drawn a window of reversal in there. And we are anticipating 16,800 to 17,000. Okay, 5 weeks stochastic is overbought and rolling over, so that's a bit of a concern here. But we think it's going to stay overbought longer. You can see that it's had a history of that because such a strong uptrending market. So we say it's got higher to go. It's going to take a while longer. It may be a struggle at times because I think almost everyone assumes a sizable correction sometime this year. There's a lot of big name analysts saying 10% correction sometime this year. Our best forecast is it'll be during the latter half of the year. May not take that long at all. Just a month or 2 or 3 months, but it could drag out something longer. You could also have stalling out moments, and it doesn't even have to be that large of a decline. Okay, so we think the long-term trend is up to April to June. I'm even favoring now May, June, but we can see how it can extend to stay all the way up to August, September, and then have a seasonal September, October. Those are normally the more poor performing months of the year. And that could be the 3-year cycle bear market, and they get it over and done with. And as you zoom out to still larger cycles, the 9-year cycle, the stock market's actually up from 2009 to 2017 to 2019. The Dow could be at 18, 19, 20, 21,000, okay? And the 3-year cycle is just going to be a ratcheting process inside of that, up, down, up, down, up, down, but with a bullish bias to help create that larger 9-year cycle. And that 9-year cycle can be more intense and easier to follow than in individual stocks and commodities. Okay? And the reason is the stock index has a very high correlation to the economy, and the economy is due to grow all the way to 2017, 2019, and by some measurements, it's not a sloppy trend. It just keeps marching higher. And we'll discuss those in our macro economy videos. Okay, also, by the way, take a moment to visit ag-financial.com for the Possum Report and learn more of our services. You can also find our services combined with the quantitative stock index and various ETFs research by Matt Peters at imtusreports.com. Okay, just had to make that little plug in there. Okay, so what we've got is that we're in a bull market for this decade. We're in a bull market probably to mid-2014 or something like that. And we can see that as an increment, a ratcheting process, we've got this L1 uptrend, but it is due, okay, to top in a few weeks here, probably late January, beginning of February. We'll have a little bit of a pullback, maybe 3% correction. Some are allowing as high as 5. I'll just stick with 3. And then I think it's just going higher later. So I think this overbought condition is somewhat correct, but I just don't think it really means for a sell signal. And the model is saying it's not really overbought yet. It's just getting closer to it. And that overbought would have something to do with a certain degree of overvaluation. Right at the moment, still looks like a bull market. I think we just had a short-term correction, and it should trend higher. This is NASDAQ Composite. It is in within a window of reversal for a top, but that's only one kind of forecast. We can juggle that out so that it tops closer to the end of January. It can overlap into the Dow Jones forecast, but it does warn it can all do a little bit something different. But right at the moment, this still looks strong for the composite index. We anticipate still higher. This is Russell 2000 index. Also suggests higher right into the time zone for a top for the, as with the Dow Jones Industrials, but it's suggesting as a possibility it's not as important a top. Get a little pullback and there's a important a bottom, and then we're going to see higher prices March, April into a more important top. So it's a warning. It can have the same timing, but we might not have the understanding of the tops being corrected. One market can be wrong and the other market right. What I think it also suggests, however, is they both can be right, and we just got a bull trend right into summer, and then somehow they'll coincide and merge with one another for maybe a important top going into late spring to summer months. Okay, this is an index of China. It is a bit of a concern that it's coming down this way. They've been concerned of how well they're handling the market, so we've got to be a little cautious of that. However, we got a gap down for this index. Probably someday will get filled, and we have an oversold 5-week stochastic. There is an L1 top due out here in a few weeks. My guess is I'll get a little relief here and a little pop, and I'm not too concerned long term of this concern of China. Okay, if we're going to have a problem with China, I think it comes in the latter half of this year, and that might be the driver for the U.S. to have a little bit of concern. This is the global Dow index, pretty much same forecast for the Dow, should be rallying but into an L1 top in the next few weeks. Nice strong trend, bull market. This is Japan, no change, nice strong bull market move, still in an uptrend. This is Italy, performing very well. We've been bullish on Italy and Europe for some time now. Looks good. And this is Spain, looking very good. They're in a depression, but probably pulling out. Here's the long-term chart of Spain, but this was a different index, and I didn't bother updating all the labels from the previous index. But at any rate, 72-year supercycle bottom in 2012, later than the 2009 bottom for U.S. and most of the world. We triggered a buy signal in there, and I actually bought a fund. I can't think of the name of the fund. I own it. Still riding it higher. I'm going to do something different with that fund. It's a very small investment. I'm going to try to set out for the next 20 years to follow the supercycle and see what happens. Okay, so bullish there for Spain. So I think that tells us Europe is out of a recession. They bottomed in 2013. Some measurements say 2012. So I think the whole world is on track here. I think Mexico can come to life. I think it's pulling down into probably an L2 cycle bottom here. And I'm feeling rather long-term bullish for Mexico, but it's already had a very nice run since 2009. This is the MISEX Russia index, and I only have it going back to late 2011. It's floundering a bit due to primarily commodities, but commodities should be better in 2014. I think Russia is going to pick up the pace here and do quite well in 2014, but certainly pull back this week. You know, if you like Russia but concerned, you wait for it to take out some of these recent weekly highs. Brazil's had a downtrend, still sluggish problems, bumping up against a long-term resistance line. This is partially due to commodity markets. That should improve for 2014. We're still long-term bullish for 2014. We think Brazil will eventually break out. This chart of India, long-term bullish. We said they could have complications and problems going into the end of 2013, beginning of 2014, then bullish. You can see they did hesitate into the end of the year here. I think they're probably still bullish. This chart's actually a little stronger than a previous index chart. This is a new index chart for us, but basically we're feeling rather positive on India. U.S. Dow Jones Real Estate Index, the REITs, okay? Should have put in a long-term bottom here or here. We think it's bullish for 2014, but it can be a slower rally than some of the other market sectors. And this is the Morgan Stanley Stock Commodity Index, meaning it has stocks that relate to commodities or commodity companies. Broke out of a long-term resistance line, took out a long-term 3-year cycle top. For all I know, this index could rally all the way into 2015, and some commodities are allowed to rally that far, but I'm still suspicious of maybe some problems later in 2014 relative to the rest of the stock market, but I think it looks good. I think it's waking up. I think it's firm. Okay, that's it for this week. Again, put us down. Super bulls for the stock market. We're bullish to 2017, 2019 for the stock market, but there can be 10% corrections along the way. We think a correction is probably due latter half 2014, not first half 2014. We think we still got a bull move coming here, additional upside action. And then as we break that down into the intermediate inter-year trends, the best we can tell you is we think the trend is still up. We think they're going to rally prices here for a few more weeks, pull it back for early February, then still higher into late spring to summer months. Thank you.